Alright, so anyway, let's just get straight into it. So, sitting here on a Tuesday, came down Monday. Yesterday, made a low at the discount low of this daily for Vega. Still understanding that we're in a very strong bullish order flow, so we'd be looking to frame a long up off of this discount now. Now, if it shows us something different intraday, then obviously we're not going to force that idea. We're more than willing to switch our bias, in a given session. Now, with that said, let's go to NASDAQ. From this swing though to the high, okay, find equilibrium. We trade down into not only this discount daily for value gap, but also clearing out these relatively equal lows. Okay, so sell side liquidity on the daily time frame has been tagged, and we repriced into an inefficiency. So from here, we would look to frame along. So I'm gonna go ahead and show you something here. This small up close candle here, this here is our breaker that we're currently continuously working off of right now. Stab, stab, stab. See that? Boom. And if you take a close look, okay, here's our midnight opening. We trade below that. What's this? Bullish power of 3. So open, trade below the opening, trade higher. We fail to take out this low here, and we find support around new day opening gap here. We go to ES, basically the same thing. We come down, take the short-term low here, below midnight opening. Here's new day opening gap. We go a little bit beyond that, and we trade to midpoint of this discount wick right here. I'm going to drop down to the 15-minute time frame. So if you take a look here, we have these relative equal lows here that were just pierced. So we poked above these highs here. What's that doing? Retail sees that as a nice breakout off a continuation. They want to buy that, but they don't understand the time and price theory. So they're likely to get stopped out. What is this entailing here? This is kind of like the sucker play. Trades up, lulling traders into getting long, and then what does it do? Drops straight down below the lows there. Now from here, is it going to go higher? We shall see, because guess what? We have 10 let me make sure I'm not mixing days up here, and let me make sure I'm actually accurate on that before I say anything. Yes, so we do have red folder news at 10 a.m. Okay, so you guys already know the protocol for that. We always wait for 10 a.m. first, allow the manipulation in the marketplace to be completed, and then we take our trade. It's very simple. It's a very simple rule. It's served me well for years now, and I'm always going to stick to it. Okay. Okay, NASDAQ going to be attacking those lows as well. Now the key here is not seeing, particularly on the hourly and 15-minute time frame, if we're going to be framing longs today, the key is we don't want to see any closure below the breaker here. Okay. So we did have a SMT divergence as well. I failed to mention that. This London low that was created, so ES obviously failed to take out the low, still taking out liquidity, still trading into this rejection block down here. Okay, the clean bodies which hold the bulk of the liquidity in the first place, right? So I'm going to go ahead and map out this tiny hourly for value gap. I want to see what we do with that here. Okay, so we're not sitting here trying to force setups. All we're doing is studying price, studying what it's doing, what levels it's reacting up off of until that news driver is released. Okay, so notice how the averages are doing different things now. So we have Dow pressing, absolutely pressing to the upside, ES going lower, and then the NASDAQ going lower as well. Now, I actually like this drop lower. Why is that? I'm going to go ahead and take my fib. Now, in this case, we wouldn't particularly, it is allowed, but we wouldn't particularly need an actual discount from the low to the high or an optimal trade entry. Why is that? Because we were trading down into this breaker here and this large hourly imbalance. And what? This is the key that brings this all together. Liquidity has been taken. So short-term lows taken, that is a short-term discount into higher time frame levels. Okay, such as this breaker here. Okay, so I like everything that I'm seeing here. Let me show you guys dollar index quick. So we do have a little bit of a 3 drives pattern going on here. We drove up once, buy side taken, there's our second drive, buy side taken again, there's our third drive. We're well beyond the midnight opening here on dollar index. We're going to have this fair value gap hovering down here and these relative equal lows. Now, I will say for dollar index, it has been a little bit tougher of a read just because of the kind of high resistance environment we kind of been in as of late. So I haven't been trusting it as much. But with that said, it's still a useful intraday, okay? So let's see if we can steamroll through this 5 minute fair value gap here. So remember, we have a run on sell side liquidity internally down into the hourly imbalance here. Midnight opening created our classic London low, came up. What would price be drawing to? Well, number one, we have short-term buy side resting up here above this PM session high, and then we also have new week opening gap up here, and this acts as our magnet. Now, if you go to NASDAQ, we're looking for an upside draw. Okay, we see all this consolidation here. How many times has a significant buy side liquidity pool been taken on NASDAQ this week? Okay, we still have yet to see that. There's a very large number of buy stops resting above these highs up here. This is what the algorithm is going to seek if we're going to be longing up in here, which I believe we will. Okay, so yeah, very strong push to the upside there. Okay, so it is 9:43 a.m. There is no entry. Okay, it's not 10 a.m. yet, and I mean, even if it wasn't 10 a.m., there's still literally no entry. Okay, all it did was come down, take the sell side, and there's no short-term retracement into an order block or for value gap. So even if it, there was no 10 a.m. news driver, I wouldn't have taken a trade yet anyway. All right, so there's our first short-term retracement. We have a Fourier gap. This is not a long. Why is it not a long? I could be longing this and it could work out. Yes, that's not the point here. The point is statistically and historically taking trades prior to, just prior to a 10 a.m. news driver typically ends in a stop out. Okay, so yes, it can work out one or two times. I'm not saying that it can't ever work out because it can. But if you're in a long-term mindset and not a singular winning trade or losing trade type of mindset guy, you're going to understand that the better move is always going to be stay on the sidelines until that manipulation is out into the marketplace. Okay? Very, very simple. We have rules for a reason. They're not random. Gotta stick to them. So I'm just really looking at these relative equal highs here. I can't really say, oh, we have an intermittent term high and we can move away from this. No, because it's relatively equal highs. Ask yourself, has liquidity been taken? Yes. Sell stops. Where is the market drawing to? Obviously, with the slight benefit of hindsight, but we've been saying this ahead of time anyway. These relative equal highs here. So about 12 more minutes until that 10 a.m. news driver comes out. So ES kind of falling off the ladder here, and we have NASDAQ literally with ease soaring through these highs here, the relative equal highs. Now remember, we don't have those relative equal highs on ES. ES actually took the highs out and moved away from that. This here is a solid reasoning as to why ES did not have the same urgency to get above the highs, because they are not equal. It is not retail prey. Okay, it is an intermittent term high. Okay, so all I'm doing here is simply mapping out this balanced price range because it's important how price treats the high end of it, and now that we're down into the midpoint, so simply just take your fib, low to high, right down into the midpoint right there of the balanced price range over here. So I mean, once again, it comes back to not taking an entry until 10 a.m. news driver is released. You take an entry like this, okay, clearly it panned out up into the highs, but I mean, if you couple this trade with greed, then you'll be upset. Okay, so this has to be like a quick in and out type of trade. Okay, I'm looking for the real move of the day, not small intraday swings like this. Okay, exactly to the tick, midpoint of this wick here. See that? It's 15-minute wick. Now, the strongest midpoints of wicks that you're gonna find reactions up off of is a wick that has taken out sell side liquidity like we did here, and then we work in that midpoint of that wick, and then you typically see a very strong move away from that if time and price align. Okay. Now key phrase I should say, if time and price align. This is not paying out every single time because guys, they try to pull up like long-term statistics and say, oh, the strategy doesn't work out long-term, and the statistics say otherwise. Well, you're not factoring in time, or you're not factoring in the real-time logic and narrative that would cancel out all those other setups, quote unquote setups, that you're adding into your statistics. So that's kind of a flawed way to approach trading, is trying to, you know, crunch the numbers whenever you're leaving out the real-time context. So it looks like ES is going to press into a new low now. So, I mean, we're pretty much in that awkward. NASDAQ came up, grabbed the relative equal highs, and then we're back into the middle of the range here, right? ES down into a new low. The only thing I would say is as long as we hold this for value gap, we should propel higher going into 10 a.m. news driver, okay? If we see any type of closure around the midpoint or the low end, then obviously I'm going to start looking for the lows down here, and more specifically, I'll be looking at this low right here, this Monday daily sell side liquidity pool. But like I said, all we're doing is digging into this hourly order block here. So this hourly down close candle came up, digging into that, and then we have, if it loads, 15-minute for value gap. Okay, it's important to note that we do have a strong SMT divergence going on right now as well. So we have this initial low created. NASDAQ completely failed to even get close to that low and rushing higher, which clearly is the leader to the upside. Okay, so our bias so far is correct, and we'd be actually looking at long ES instead as a six sister type of approach, meaning it's lagging behind. Okay, I mean dollar index really just consolidating here. You know, even with everything that I'm saying here, it's simply just no entry point though. Okay, it's very early in the session, especially with our 10 a.m. news driver, and you know, you just kind of wait. It's simple, guys. Just stick to the rules, be patient, and I don't even have to say anything else. If you stick to the rules and you're patient, that solves 99% of your trading problems. So I'm on the regular trading hour gap chart now, and I'm showing you, here's our 9:30 opening. Notice how in the opening range we utilized it a little bit. We traded it basically covering the upper quadrant there. So let's go ahead and take, here's our closure, previous settlement closing, and then we have the 9:30 opening here. And if you take a look, we actually traded exactly to the midpoint with the bodies and created the swing low and turned away from it. Let's take a look at ES. Okay, almost at the very low end of that regular trading hour gap. So I would be looking at long ES because it's lagging behind and has a, you know, more upside to get to. But you know, with that said, there's just, you know, no entry yet. That's it. I would say it's pretty likely that I'm going to get a 5-minute entry though, rather than a 1-minute. But ES. So see how it's coming down to this series of down close candles here. That would be our initial order block. Beautiful. So it turns into this 15-minute order block high right there that we're tapping into. Okay, so notice on ES, not only are we wicking down into the balanced price range right here, but we're also wicking down into that order block. So I'm going to go ahead and long those 2 price points with 1 contract here. If we were in sync with NASDAQ a little bit more, I would be using 2 contracts, but in this case I'm using 1. And alright, I'm going to see if it wicked down to that 1-minute for value gap. There it is. Okay, perfect. And I'm going to go ahead and long that. Perfect. So pretty much every moving part that I wanted to see. Okay, we have time and price aligning. We had that manipulation come through the marketplace. Honestly, didn't do as much as I thought it would on ES here. But now that we had that out of the way, and we have all the context supporting everything, and I was favoring the upside even, you know, before any of this, we now have our entry, okay? Not the prettiest entry in the world for someone that, you know, likes that classic 2022 model, but at the end of the day, we're longing where smart money would be accumulating long positions, okay? And I'm going to go ahead and put my sell limit right at midpoint of new week opening gap up here. Okay, this is definitely predictable price action, or else you wouldn't see me doing what I'm doing here. But with that said, it's just very odd movement. Now, it's one thing to sit here and reasonably, you know, look at the chart and say, okay, well, this is probably a red flag, or okay, this is going in my direction. I actually like seeing these signatures. It's one thing to do that, and it's another thing to let every single price fluctuation affect what you're thinking. Okay, if it's at that point, then you simply probably just need more experience. Okay, ES doing the same, and then we just tapped into that order block for a 4th time. Okay, that significantly drops the probability. So I'm just going to go ahead and take profit right here. Okay, so I took the shallow profits here. Very surprised we did not tap previous hours high here, but you know, wicked off, never seen it. So with this case, this could be a potential target for the PM session. So yeah, I was just watching this, seeing us come up above the buy side liquidity here, and the initial aggressive expansion lower. So that's just a red flag. And then the other one was we traded into the order block a 4th time. Okay, it's one thing to see it, reclaim it, trade to it a second time, but it's another thing to have it trade into it 4 times, and that's just not what I would want. So even though I'm very one-sided today, I had a predetermined bias shared with all of you. Despite all that, I would just rather not sit through this price action. I would rather wait for better setups, which are likely to come in the PM session or just Wednesday, Thursday, and Friday. Okay, so Monday and Tuesday kind of setting the stage here now that we traded into key higher time frame levels, right? So notice after we continuously traded back into this order block, this key level. So what makes this level so key is the fact that we traded down into that discount, traded into key levels, and sell side was taken at the optimal time of day. This is our key level that we are utilizing too long. Using that one rule from experience that I've learned is the fact that we traded down to it that 4th time, allowing me to take my profits early on, right? Notice what it's doing after that. Has it been trading in my favor after I cut bait? No, it's simply just been consolidating, okay? And the fact that it's doing this, I'm really assuming that I'm going to be longing later on today up into these highs around 1:30 to 3 p.m., somewhere in that time window.